Hi everyone, so today we'll do a stock analysis on South32 LTD, ticker S32.AX, and it's a diversified metal and mining company. Quick disclaimer, I'm not a financial advisor, this is my own research, up to you to make your own decision. So this time I decided to show a bit more on the summary because I realized that we do a lot more than just showing a few things. So this is all the elements that I looked at when I look for a company, so it might help you as well if you are interested in doing more research. So I put it all there and you can have a look, and that way we can better compare companies. So let's start with the company profile. So South32 operates as a diversified metal and mining company. I would say it's kind of like a base metal overall, but they do as well like some precious metal. And as the main assets are bauxite, alumina, aluminium, copper, silver, lead, zinc, nickel, coal, manganese, and ferronickel products. So they have actually two, like obviously like the junior miners, where they actually do more like exploration projects, and they have the development, like where they just mine. So they quite extended. There are a lot of projects overall, and then they're located in different part of the world. So I will show you later, but it's not as many countries I've noticed here. It's just a few, but they are very international. So that's what I like about it. So the company was incorporated in 2000 and its headquarters is in Perth, Australia. So now let's look at the assets in the portfolio. So there is like diversified across multiple countries. So I would say all Americas, then South Africa, and then Australia. In the US, we have mainly aluminium, alumina, and copper. In Brazil, it's mainly aluminum, alumina, and then copper in Chile, and then after we have aluminium and manganese in South Africa, and then the last part is alumina, zinc, and manganese in Australia. So obviously there might be a few more countries, but it's just to give you an overall idea where they are, because I can't see them too well. I'd say it's not as well explained as other companies, but I'm trying my best to show where the assets are, but here they are. So I thought this slide was interesting. It's showing all the junior projects across the world, and they are mainly project related to copper, nickel, polymetallic, and then zinc. And they are all those projects are located in Canada and US, in Argentina and Chile, I think, in Namibia, and then in Australia. So there are quite a lot of projects mainly in Australia for the junior exploration projects. So interesting to know. So I enjoyed watching this slide because it's very easy to notice what kind of metal they're mining mainly. So here is they're using EBITDA, so I'm not really sure about the details, but let's say it gives a brief idea of where the most of the revenues come from. So like alumina and aluminium are actually 64%. I'll give you a big idea that alumina and aluminium are quite important for the company. Then we have copper with 20%, and then zinc 12%, and then nickel 4%. So yeah, I would say this is mainly a base metal company with mainly copper and aluminum. So what interested me in this company was mainly because of the copper. I think there is a potential in the next few years for copper to rise and catch up with silver and gold. So that's the whole idea why I was interested in looking at this company. So that kind of confirmed what I was talking about. So it sees mainly a base metal company. So and then yeah, they're thinking of growing their pipeline into basically different projects. So they're showing a bit more in there. They're looking into battery as well, manganese, copper, zinc, lead, silver, and nickel. So yeah, anyway, this is just to show that they're actually quite active still, and they're trying to expand, which I quite like. So I found a slide on their presentation as well that was talking about like capital management, and I like how they are diversified, like in a way that they do capital expenditure at 43%, then 20% they give dividend, and then like 14% capital management programs. I don't know what that means exactly, but and then 20% on acquisition and a few percent on exploration. So to give you an idea, they mainly focus on pretty much acquiring new projects, mainly doing share buybacks and dividends. It doesn't seem like exploration is that important for them, so they might be finding already projects that are promising instead. So yeah, I quite like that strategy. Is pretty safe, let's say. There's no huge risk, and I like how they diversified it so that it's not like too much dividend and not enough expansion. I think the ratio is good. So here are the unit costs for all the metals. So honestly, in this case, I wasn't able to get a proper number on the reserve and like how much like they have potentially mine in the future, unfortunately, but because there are too many metals and I find it a bit complicated. The only thing I figured is that the alumina and aluminium thing part, there is like in here, they actually are on, from memory, something like 20% margin, so it's not that high. So the cost is 80% and they only profit 20% from their cost. That's what I've seen recently with the price. So I know all the aluminum prices, they are pretty much like pretty low at the moment, so it's still pretty good that they are profitable. And then like I think the manganese as well is something similar. It's very close to the current price of the metal. So that's it for this slide. So for those who would be interested to calculate the reserve like I do in the previous slides, that's where I found the reserve in there with all the metals. So they're talking ore and coal reserve, million ton, and then like so the coal is here, the manganese is here, and the alumina is here, and I don't know all these ones what they are, to be honest, exactly. I will have to check what each project, what metal they mine, but it gives you a picture of what they do, their reserve, and I would say, if I understand it right, they're pretty balanced, and I wouldn't say they have too many reserve in one country from what I'm seeing. So I quite like overall. I could look further to know how discounted the company is really, but I like the diversification. It's a bigger company, it's not a smaller, so let's say that's fine with me. But if you want to have a look, here are the slides that's in the annual report in 2024 that I found this one. So now I'm going to look at the fundamental analysis. So in terms of the market cap, it's 13 billion. The like P ratio is 5.5, and the forward P is 17. So it's still reasonable price earning. The price to sale, price to book less than 1, enterprise revenue 1.4. That one is a bit higher to EBITDA at 12. But if you compare with all the base metal companies that I've seen so far, in my opinion, I think this one is quite reasonable in terms of valuation. If you compare that with coal companies, it's a bit pricey, but if you compare that with like all the other like silver and all that, I honestly notice that this one is one of the lowest that I've seen. In terms of the size and discounted and still making money and stuff, I think it's quite reasonable. You might find better, but like I think it's fair. So in terms of profitability, so they're still profitable, which is good with all the pressing numbers, but not in the last earning though. I'm just noticing, but yeah, anyway, doesn't matter. The total cash is 1.6 billion, and then the total debt is 1.6 billion. So they pretty much have no debt and zero cash. And then yeah, so this is a bit concerning in terms of leverage free cash flow of 200 million. So I know price are depressed, we see that later, but still you have to not be depressed for too long, because that would start to impact the company. In terms of the rest, I would say it's pretty reasonable, nothing special, even giving a fairly reasonable dividend, but nothing crazy. Yeah, the held by insider is only 0.45, which I would say is not that much, but it's better than zero. And institutions are at 42%. So in terms of the balance sheet, I would say there is very little to even complain about or notice. I mean, it's pretty stable, nothing special. So it's not growing fast, that's for sure. But the equity is actually bigger than the liabilities, which is always a good thing. So the assets versus liabilities are very stable. I mean, much higher assets compared to liabilities, which is phenomenal. And equity is not rising, but let's say staying flat. Then we have in on the top right, we have like the debt and the cash that are, yeah, I mean, they're close by, so they're just crossing around. And then the equity is not doing anything, same as the previous one. And then the current assets, very little to complain about. The current assets are much higher than current liabilities, which is all we want, and I think it's fairly safe, that one. I like that safety part. I mean, it looks like a very diversified, very stable company. So in terms of the revenue, as you can see, we have a big gain in 2022 overall, and all the other years were pretty average, even not that great. So it shows that they're still not doing that great, to be honest. When you see the cash flow as well, it's going down. So yeah, I think it's related to the price of the mines. The price of the commodities that are suppressed a lot. So the capital expenditure are rising slightly, so not great, but doesn't look that catastrophic yet. And then the earnings per share, as you can see, it's been suppressed, and only in 2022 was great. And then the share outstanding are actually going down, which is good, but I wouldn't say they are. It's like a major benefit. It's probably just a 1 or 2%, so it's just slightly better than before. So here are all the director transactions, and as you can see, there have been a few buy in this year and a bit from last year as well. So they're not major, but they are still 100,000 on those, and then 75 from last year. All the others, though, as you notice, they're not nearly all the others are actually not all of those. They are actually just bonuses that directors get, and then all they do is convert into share. So that's why you see all these lines. So I wouldn't say this is as relevant, but at least they are buying a little more, and that's always a good sign. But I wouldn't say it's total great, it's just a little plus. So now we're going to look at technical analysis. So this is actually the monthly chart, and all I'm seeing in here is this partly why I like this stock. I mean, it's not something that I expect to do 10 or 20x on it, definitely far from it, but as you can see in there, it's kind of moving in cycles with a retracement around 62 to 79 around there, and then it can pushed back, broke on the upside, and then again 62 to 79. So I quite like that area into buying. I personally bought some, so I would say this is like I have skin in the game. So I'm not just talking like and just like doing advertisement or whatever on YouTube. I'm literally just showing what I'm doing a little bit. I don't want to tell more detail, but just to get an idea that this is what I do. Yeah, so I believe that it's possible that it could continue to get to 6, but only if the commodities price will rise. Otherwise, I don't expect much that's gonna happen. But like buying at this point, I would say the risk is lower, and then you might get good return, fairly reasonable, or just I would say going sideways, like it's continued, or a bit down. So yeah, but I don't expect too much downside because I'd say they're already fairly undervalued, and looks like a fairly stable company and not like a small cap where they have a lot of volatility. This one is a bit more stable. So now we have the daily. Honestly, the daily is pretty on the downside. You can still see it didn't break on the upside yet. This is literally that range to break. Like I would not be safe until it breaks that. The problem is that range is so high that I would say it's not discount anymore. So in this case, I took the risk of getting it a little cheaper, knowing well that it could continue to fall down. It's just because the discount is fairly good on the higher time frame. I expect that by default it should be not going much down, but at the same time, if you look at it, the chart doesn't prove anything, so it didn't prove that we're on upside again. We're still on downside, and we have the risk of it continuing down. So yeah, that's the trade-off. What do you want to do? You want a cheap price, but don't have any safety in terms of the trend, so you don't know if it's going to go up or not. Well, it's going to potentially even go further down. So yeah, this is I decided to take a decision in there, but I don't like that range for sure, like in the red on the daily. So let's see how it goes. So in the previous slides, I was mentioning that aluminium and copper were the main like metals that were bringing the most, like, let's say not earnings but EBITDA. So I was actually thinking the best way is to look at those aluminium prices over the past 10 years. And as you can see, like the time where it actually gained the most money was in 2022. So it seems relevant with the company earnings. And then since then it's been pretty much going sideways. But I would say if it breaks on that 2,700, probably around there, then I would say it could we could go back into upper trend. I like the fact that it's consolidating. So it went up and consolidated and maybe about to break, but those metals are usually sudden. It might just go like boom, like in one go. But at the moment, that's probably why they are struggling in terms of the sale is actually very low compared to the cost. And I would say if they get to 3,500 or 4,000, that's when the earnings will really come. Until then, we would just be surviving and waiting for the next commodities boom, pretty much. So with copper, it's a little different story actually, but you can see in 2022 it was like a little upside, but since then, if you notice, it's been keep staying like pretty much higher and higher until the massive drop last week or 2 weeks ago, and I thought that was really manipulated. I mean, you can clearly see like it just break and then go for a few weeks and then boom, in one day it just dropped like 20%. To me it's almost funny now, but yeah, you see those manipulation a lot everywhere in all the metals at the moment. I'm not sure what they're trying to do, but it's clear. So yeah, I would say that copper seems to not impact much the earnings when you see here, because it's already higher and we don't really see it in earnings. So let's say that aluminum is probably the most relevant. So if aluminum goes to 3,500 or $4,000, I would say it could be very relevant. But if not, then I would say the stock might stay sideways. So let's go to the conclusion now. So as you can see, this company has actually a lot of advantages and not that much risk. I think it's the first time I'm not actually writing that many risk. So it's very balanced company. So in terms of the fact that they are like fundamental, look very like spot on, very diversified, very like clean in a way. It doesn't look like that there is any risk that I'm seeing, which is rare. Very diversified as well in terms of like globally there are many countries, looks fairly diversified as well, not one mine that has 80% and all the others that have nothing. And this look like a proper global company, let's say, and a lot of different metal mine. Even like they have coal, they have like a lot of like aluminium, like copper, all that. I quite like that. The aluminium prices look like uptrend, so it's still more into the aluminium prices. I would say this company, that's the major thing that they're less diversified in. So I think if aluminium price will go much higher, it will actually impact the company a lot higher. So this is the only non-diversified part, but I still think it's, in my opinion, quite diversified. And then like yeah, not too much downside as well. Like if I compare with all the other stock that I've seen, usually I find like pretty like risky stuff, so I find very discounted company with like more problems. But this one, it's fairly discounted for the fact that it's not that bad. I don't see anything wrong apart from the last earning that wasn't positive, but I don't think it's that bad. And then like so the only risk is aluminum staying low for too long. I mean, at some point when they're not profitable, it will has to rise at some point anyway globally. But yeah, still a risk. And then the fact that the stock price on the downside on the daily time frame. So this is where I show you the range where it broke on downside pretty strong, and then now it's still on the downside. To me, this is the biggest risk, that it could go lower. So that's it for today, and I hope you enjoyed the video, and see you in the next video.